Welcome back, friends. I want to give you a little bit of a market update. What I'm seeing sort of anecdotally, also some cold hard facts. I'm going to throw some numbers at you, define some terms, and we're going to talk about what's happening in the Los Angeles real estate market right now. I want to say that all the rumors about rates moving up, it's true.
All the rumors are true, yeah.
Rates are moving, they're moving up. Where they go, nobody knows, but historically, if we look over the past 30 years, they're still going to be the lower side of where they have always been. My first mortgage in 2013 was at 4%. We're still below 4%, so good on you. And 4% was low when I got it. So even though we are on the upswing from the bargain basement rates are going up. What does that mean? Well, it means that the affordability of homes is going down a little bit incrementally because it's more expensive to borrow money. When money's cheap, it's easier to buy, yada, yada.
Yada, yada, yada.
Now, there are several factors that are going to influence price, competition, that sort of thing. Low inventory is still rampant. I guess it's common to have low inventory. I guess that's a bit of an oxymoron. But the fact of the matter is, there are not a lot of houses for sale. The way that inventory is usually measured, the way that we calculate supply, housing supply, is if you took all of the homes that are listed for sale today, and we assume that not another home is going to be listed, this is the finite number, we would measure that against the total number of homes that were sold last month. And the current inventory at the rate we're at last month would last us in Los Angeles 1.2 months. That's really low. I mean, if you think about, hey, there's nothing left on the shelves in a month for any product, then that feels like you need more. So there's going to be a lot of competition, and there are a lot of buyers out there. This information, by the way, I'm getting from the California Association of Realtors. I'm not making this up. The California Association of Realtors, they have great resources, well thought out metrics, and they give frequent updates to keep those who want to stay continually informed.
I've just been handed an urgent and horrifying news story.
These are trusted sources, trusted numbers. If you're going to ask in the comments about where I'm getting all this, unless I say otherwise, this is all from the actual website and articles from the California Association of Realtors. Boom, that's my disclaimer. How do I know that there are a lot of buyers out there other than just anecdotally and knowing that there are a lot of multiple offer situations when I'm either representing a property or representing buyers? One way to tell is the MBA, the Mortgage Bankers Association, says that February over January, there has been a 12% increase in pre-approval applications. That means more people are trying to get pre-approved so they can buy a house. Lots of demand, dwindling supply, prices are going to remain high. One of the things that people I think have been, in my personal opinion, is falsely thinking that things that were going to negatively influence home prices is this raise in interest rates. There's just not enough supply, and there's too much demand that even if there are a few less people who can't afford to buy a home because interest rates have gone up, I don't think, and I have not had anybody be able to convince me otherwise, that this pop in interest rates is going to crash the market or even make us have a market downturn. What I think it is going to do, and a lot of the economists that I've been reading, economists from Redfin, from the National Association of Realtors, from the MBA and so on, are under the assumption that home prices will not rise as steadily as they have been. There's been, since last year, some markets have seen incredible growth. I've had clients who purchased less than a year ago who are entertaining the idea of selling their home now because their house has gone up 20%. So I don't think that there's going to be a crash. I don't even think there's going to be a downturn. I think there may be a slowdown in the steady increase in home prices. But what that means to you as a home buyer or a home seller is that if you are a buyer, you should not be waiting on the sidelines. I've had a lot of people ask me, should I wait until the market turns? There is no data that's telling me that the market is turning negatively. I think it's going to remain competitive, and I think if someone were to buy today and look back a year from now, they will be very happy they made that choice when they see what it would take a year from now to buy that same home. I know that there are people who are kicking themselves, and I don't want you to kick yourself. It's not a good feeling, and we all have 20/20 hindsight. Now, if you're a seller, there are a few things at play. First, you're going to get more money for your home than ever right now. And you may get more money later. I don't think we're going to see those 20% increases over the course of this year. Again, my opinion, but my opinion based off of my reading on very high-level economists who study only this thing. But it is going to depend on what your next move is. Do you want to buy that up-leg property? Are you doing much better financially now? And if you get this huge windfall, will it make it much easier to buy your next home? If so, great. I think it's going to be much more difficult to make, say, a lateral move. If you have a 3-bed, 2-bath that's worth 1.4 and you want to move to a different neighborhood and 3-bed, 2-bath is going at 1.6, it doesn't make sense for you to do that right now. That's going to be a personal choice. But if you have had a large change in your lifestyle since first purchasing your home, it is likely a really, really good time to sell because you're going to get more money today than you ever have. And if you're looking to purchase the next place, your next place is going to be more expensive the longer you wait. So it's going to be your personal choice, but it's crazy out there. It's the Wild West. One thing, I did want to take a tangent, talk about cash buyers. We're talking about all the competition, and people who have financed offers are always afraid, I'm going to get beat out by a cash offer. That is not always the case. Frequently, a cash buyer is someone who's looking for a deal because they know they have no loan or appraisal contingency, and so their offer could be very appealing because it's going to be a short escrow, short inspection contingency. But if I'm representing a property and I have a 20% down, financed, responsible buyer who's going to offer more, I am quite likely going to accept that buyer than cash buyer, obviously with some caveats, but I am looking for someone who has the highest likelihood to close. The fact of the matter is, most of my buyers have gone through the full pre-approval process. I've spoken at length with their lenders, and I know that if we're writing an offer, unless they go buy a car in the middle of escrow and finance it, I know that they're going to get their loan. I can feel confident in submitting an offer without a loan contingency. So I may get a financed offer that, in terms of contingencies, looks pretty similar to a cash offer. And especially if you're going to be able to give a higher price, it can be very compelling. So the buyers out there who are very nervous that you're going to get beat out by a cash offer, I don't think that fear is totally founded. Now, if somebody has a much higher offer and it's cash, yes, that's going to be hard to contend with. But on the listing side, I'm not always seeing that. I would say more often than not, I'm seeing a cash buyer hoping to get a deal as opposed to paying the most for a specific property. So that's my little tangent about cash buyers. Now let's get back to the housing market in general, a little conclusion about where we're at. If you're a buyer, what do I think? If you're a seller, what do I think? If you're a buyer, it's only going to get tougher. I don't think it's going to be as steep as, say, you were looking in January and then you were looking in November of 2021. But I do think that the challenges will continue. What can you do against this? Just make sure that you enlist the help of an agent or broker who really knows what they're doing. In this market, the people who are being represented poorly they're not buying houses. It's just very, very difficult to compete unless you have someone who really knows what they're doing. If you're selling, it's a crazy market out there. Make sure that you enlist the help of an experienced broker who knows how to market and how to price your property. Pricing a property, it's an art, but if it is priced correctly, that is when you are able to get the multiple offers, you're able to decide your terms and really find the right buyer for your house. That is the market outlook right now, the sort of snapshot. Like I said, some of that stuff anecdotal, some of it cold hard facts, numbers that you can find and look up. And that's a lot of what my job is, studying data, but also learning how to go with your gut and learning from your experience, which these days is coming hard and fast and 7 days a week. Thanks everybody for tuning in. Please subscribe. Please let me know if you have any questions about anything I said. Leave some comments, like it, share it with your friends, and I will see you again very, very soon. Thanks, guys.